Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:26 p.m. on a very hot 92 degrees in the New York City, New Jersey waterfront, and now thunderstorms. It almost feels like Miami. Evening. Full disclosure, this is purely for financial education, not for any solicitation or advice. This is going to be, hopefully, a quick 15 to 30-minute video cast on the extreme volatility and markets that we incur, and a very powerful trading day. Session will be recorded, uploaded to the YouTube channel for all of you to listen to at your own time. And feel free to go ahead and spread the word of Clueless Trading, organic marketing, referrals to all your friends and colleagues out there, and anyone who's interested somewhat in understanding U.S. financial markets, trading, and making money. On that note, let me begin. First of all, we started off the day and things just went south. This was approximately 5 a.m. in the morning, right there, when we were up roughly about 5 to 6 points here from the close yesterday. And then approximately around 5 a.m. in the morning, things started to disintegrate. Reasons unknown, as I put on my Twitter feed. Pure selling came down here. They started a little bit higher and then started the big fallout. This is a 1 hour chart, so everything you're seeing, every candle is a 1 hour candle. Bottom line is, from yesterday to today, the day started off like crap, like we say in New York. And then what do? As tactical traders at Clueless Trading, we don't succumb and kneel down to the mercies of the market. We fight back. We fought back in the form of SPY 161 shorts, which generated approximately 130 to 140% in intraday profits. We went long approximately at this level, and those generated again another 130 to 140% of profits, hitting a minor downtrend line right here. This is after hours. We had down approximately half a percentage point. Well, not a percentage point. We're down 50 cents on the E-minis, 0.50, and this is where we are. What I'm trying to explain very simply, and I'm only going to show two charts. The rest of the day's action, the huge profits that were generated, are all posted on the real-time Twitter feed. Highly suggest you spend 15 minutes of your time tonight, or it doesn't even take 15 minutes. If you're a fast reader and a visual reader, it'll probably take 10 minutes of your time to see what we did. And for many of you who participated and made money, congratulations. Remember, the market is a tactical animal. The markets are not linear. They don't go up in a straight line. They don't go down in a straight line. Everywhere along the way, there are huge opportunities to make money. Each of these candles are worth 40, 60, 80% on options trades, whether it be the SPYs or the SPX. So whether or not this is going to break over the downtrend line and then hit the major downtrend line, which is approximately around the 2660, 2665 levels on the E-mini, we don't know. As tactical traders, we respect the candles, we respect what happens, and we act accordingly. We are not dogmatic traders. We are market agnostic with a bullish bias. For people who might not understand the word agnostic, it simply means we don't care which way the market goes. We are market agnostic with a bullish bias. because every time the markets collapse like this, they tend to have a substantial reversal, which hits certain inflection points. In this particular case, if we get a massive move up on some sort of positive news development from the US-China trade negotiations, from our Treasury Secretary Mnuchin, from Commerce Secretary Ross, from Economic Council head um, Peter Navarro, then we are going to go straight up towards the 2660 level. That's roughly 180 Dow points, or if not 200 Dow points, and hit that major downtrend line. We're in the business of making money, not about relying on our opinions of what might happen. However, at Clueless A Trading, we explain all the fundamental economic and global political aspects of what happens, so traders are well informed and can make their own decisions what they need to do. So this is where we are. This is looking at this point, even if we slip down a bit, which is very probable, like a inverse head and shoulder with a neckline here at 2657. These type of moves generate anywhere north of 100% profits on weekly SPY, SPX calls. So I can just shut down the video right now. Let's look at the next chart, which is a zoomed down version of what happened since the highs of 2680. That was on the 30th of April, which is Monday. Pretty dramatic, right? Very dramatic, if you ask me. This was Monday. End of the day Monday. I'm sorry, beginning of the day Monday. This is the beginning of the month May, and this is what happened. As you can clearly see, markets do not go down in a straight line. Every single one of these moves, a majority of the time, we made some pretty substantial gains. Flash crashes, and then this. At this point, it's an inverse head and shoulder zoomed in with a massive downtrend line hovering at around, on a short-term basis, at around that 2645 level. So on that note, the only huge suggestion I can give all traders, emotional or tactical, and most traders are emotional, is that you please focus on the charts. Take some trades, make some money. You do not have to hold things overnight, even if we gap open 15 handles on the S&P. Yes, you might feel terrible because you sold everything. That's okay. At least you made some money that you can put away in the bank, because cash is king. You always have to have some cash on the sidelines. Doesn't matter what size accounts that you have. Cash is king in volatile markets. Because we don't know if we're going to wake up tomorrow morning and we're going to get a huge slip down because some sort of news announcement came out of China that Mnuchin, Wilbur Ross, and that U.S. delegation basically walked out of the dinner tonight. No pun intended. We want a successful negotiation, a very delicious Peking duck. We don't want a burnt Beijing duck coming out of this distant tour all the way out to Beijing. In my opinion, the Trump team, economic team, is extremely smart, and they will do what it needs to do to calm down the trade tensions. But I wake up every morning at 4 o'clock to see how the European markets are doing, and I'll tell you, I have no clue most of the time, because this is not grandpa's market. So stay focused. But doesn't matter what happens, whether we are down again like this, We know that we can end the day with a positive finish, and you're going to feel like a king. I feel like a king today. I didn't feel that good yesterday because I hadn't sold my US Steel completely. And look what US Steel did today. I'm not even going to show it on these charts. 17 cents calls went to almost 30 cents. That is almost a double on your money. And boy, can you buy a lot of those at 17 cents. Not $17 that you got to pay for a booking.com, aka Priceline type of call. Imagine how many calls you could buy at 17 cents. You could buy 100 of those calls at 17 cents instead of one call at $17 if you're buying booking.com, aka Priceline. So, one other quick chart that I'm going to show you, which is the SPYs. This, ladies and gentlemen, and I have already commented on this and shown it, is a dogmatic short or somebody who's heavily short's worst nightmare. This is a very, very powerful reversal candle worth 400 points. 400 Dow points. The last time we saw this reversal was here. That was back around the 24th, 25th of April, right there. I can detect any time in this period that we saw a hammer reversal, and this is called pattern recognition. Don't need to be a rocket scientist to figure this out. You don't need to be Elon Musk. But these are serious, and this is a much more serious, a much more longer tail hammer reversal. It doesn't mean that it can reverse itself. But for dogmatic shorts and people who just think that we're just going to hell in a handbasket, the United States is finished. That's what most shorts think, to be honest with you. This is not a good sign at the end of the day. So I looked through each one of these patterns, all the way from the 2800 level to the 280 on the SPYs. I could not find one single hammer reversal of this magnitude. I found enough hammers. That's a bullish engulfing. That's a hammer, but still blood red. That's a hammer. This is one. But of this magnitude, where the tail is so long, I could not find one. Does this guarantee anything? No. It simply tells me that we have a good shot to at least test the 50-day moving average, the 34-day moving average, the 20-day moving average, I'm sorry, the 5-day moving average, the yellow line right here, the 20-day moving average, the blue line, which still haven't seemed to have really buckled. A buckling is when all the lines cross like this. That is when you can go swing trade short and say, that's it, this market's going down. But you can't even do that in these type of markets because everything is controlled by machines known as algorithmic algo HFT, that stands for high frequency trading black box supercomputers. So just when you think it's all over and we're going to test this level, the market turns. We did do that intraday short that generated 140%, but not that you can go to bed with and say, honey, I'm going to marry you. You don't marry things in this market, you date them. Same thing with trades. You don't marry them, you date them. Only things you can actually marry over a longer period of time, what we call long-term swing trades, are the Chipotle, Alta, Win, that type of trade, and a couple of biotechs. You can marry them. You can divorce them anytime, i.e. sell them. I've been married for 20 years. I'm not looking to divorce anything. But when it comes to trading and markets, you date, you Tinder, and you leave as quickly as you came, as long as you have the rewards, i.e. profits. Have a great evening. God bless you all. Stay focused.